Recent data from Glassnode reveals that the Bitcoin miner hash price has touched a new all-time low of $58,300 per exahash a day. Whew. Well, joining us now to discuss the state of Bitcoin mining is Greg Beard. He's CEO of Stronghold Digital Mining. Welcome, Greg.
Thank you for having me.
Thank you for being with us. So, Bitcoin prices are falling. And of course, the mining industry seems to be under a lot of pressure. Stronghold also completed a debt restructuring recently. So give us the overall picture. How are things going in the industry? It just seems from the outside tough.
Oh, it's absolutely tough. So I think we have a few advantages. The first is that we're vertically integrated. So I think the way our source of power, which is our biggest cost, it comes from our reclamation activities. So we are cleaning up waste coal across Pennsylvania. And as we clean it up, we convert that waste into power and we use that power to make heat. So hopefully our cost to mine Bitcoin is lower than others because of that. But hey, Bitcoin's at a 2-year low, as you'd mentioned earlier, and hash price is at an all-time low. So I think those that don't have a really firm grasp on what their costs are going to end up being really hurt in this crypto winter.
Yeah, so you mentioned the price of energy. You guys try to keep it down by having by reclamations, et cetera. But do you see that the cost of oil, while it's still falling, is nonetheless relatively high from perhaps when you guys started getting into it? It seems like there's a lot of competition for energy out there. Questions about what's going on with Russia, Ukraine. Do you see this as a major hurdle in the months to come for the Bitcoin mining and just general mining industry?
Yeah, for the general mining industry, high energy prices hurt, no doubt. For a vertically integrated miner like us, we benefit from in a few different ways. One, if Bitcoin prices are high and the hash price is high, we can always mine and sell Bitcoin. Alternatively, if power pricing is super high, instead of mining for Bitcoin, we can just sell that power into the grid instead of using it to convert it to Bitcoin. Or if for some reason we see super low power pricing, we can shut our power plants down and pull power from the grid and use that power to mine Bitcoin. So we have our vertically integrated approach gives us many more ways to win than just having a good hash price or high Bitcoin pricing.
So in the third quarter of 2022, so we just passed it, you guys got about 567 or so Bitcoin through mining. It's down 11% from Q2, which was about 637 Bitcoin that you got in rewards. What do you think the rest of the year is going to look like for you guys? Do you think that is it on track to at least meet Q3, or do you think that it's going to further decline?
Yeah, so we just restructured. So we are now in the process of rebuilding. So keep in mind what we did. We eliminated more than half of our debt by returning 26,000 Bitcoin miners to our lenders. And thankfully we did that because that's allowing us to survive. And we're able to rebuy those same Bitcoin mining machines or better for less than half of what we owed on them. And so it was a very fortunate move for us, and that our debt structure allowed us to do. We essentially had that structured as an equipment loan, and given what has happened in the market, before the third quarter, actually, we think we were ahead of it. So we are now in the rebuilding phase where we're going to repopulate our data centers that have more than 4 exahash of capacity to get back to that, but we're going to do it without relevering. Or we will do it without relevering to the extent that we did before. That way we can survive without putting further stress on our system.
Yeah, in a time of rising rates, as we had just discussed with our previous guest, having not as much leverage might make sense. But you're doing this right now at a time when FTX is looming over the market. the collapse of FTX. We know how it's affected crypto trading. We've seen it. We've seen some contagion happen as well. And in part, we're also seeing some of the effects still from the three hours Capital Terra Luna debacle of Q1 and Q2. So how is all this affecting your business? How is it affecting crypto mining in general?
Yeah, so hey, we're now in a risk-off period of time. So I would really view rising interest rates as depressing, tech valuations broadly. I think crypto is the most volatile of any tech investment, and we now see there is a big correlation between tech equities and Bitcoin and the whole ecosystem. So, now that we've seen all of these failures and contagion, we're really amplifying this risk-off period that we're in. So I think if you were to fast forward, 5 years, you would look back on, 2020 and 2021 as probably being an irrationally exuberant time where businesses and people were funded with a lot of equity and debt capital that probably shouldn't have been. And the great unwind is happening now, and that's painful. So I think what you really have to hunker down, think about survivability, to then take advantage of the brighter days that are sure to come when the system is cleaned out, which is in the process of happening.
Now, are you guys structuring yourselves to be an acquisition target or to acquire smaller miners out there that might need the help?
You know what? So I think there are dozens of smaller private miners that wanted to go public that didn't make it through that window. And I think that there are many of those that are potentially targets of ours. And at the same time, if you looked at the public mining sector, most trade below $1 now, and the cost of being public is high. I would say the cost of being public just for D&O insurance or for the legal expenses related to public filings, it does make sense to see mergers of equals or even potentially to sell. But that's really, I would say, just the basic math behind running a public company. I would say consolidation makes sense because a big portion of everyone's cash flow goes to being public. So I think we're not far enough along with anyone to really comment on whether we would be an acquirer or an acquiree. But I would just say, hey, in market conditions like this, it makes sense to consider